Hello, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened in the market during the previous week using the technical charts, and we'll analyze and understand them better and learn something from it and plan for a better trade for the next week. So here we go. Let's get into the charts first, and then we have the weekly charts for the Nifty on the left side and the Banknifty on the right side. Look at this. Weekly candle is bullish. Almost like opening is a low pattern that is there, wide range bullish candle on the scene. Right. So the previous weeks inverted hammer on the Nifty and the dark cloud pattern on the weekly has been negated because of the bulls, and it's continuing the rally of more than 9 to 13% of the Nifty and the Banknifty respectively. So that's what weekly charts are showing. Now daily Friday's candle is showing a hammer green bounce up support from the CIP bounce zone, so the Nifty, and a wide range bullish candle once again. Banknifty has broken out, completely engulfed almost the previous candle on the daily Friday. So big moves and bullish moves negating the previous week moves. That's what. Let's just summarize and see what's happening. So it's 247 points of 1.37%. The Nifty closed green. Wide range bullish candle is what the weekly candles are, and the rally seems to have resumed, and now it's more than 9.3% of the move that has happened, heading towards 18,500. So trendline channel breakout had happened last week, and then it's about the previous breakout zones as well that you can very well see in the weekly charts. Banknifty has closed to gain 2.67%, 1,138 points up previous week. Big mega move by the bulls on, after a small retracement or a dark cloud sell-off that happened after the HDFC realignment happened on the MCCI index, and that's a wide range bullish candle on the Banknifty also, and it completely negated the previous candle's dark cloud pattern, as I said, and it's resuming the rally, and it's now more than 13.7%. So it's just 500 points less than that away from the all-time high Banknifty. Can you believe that? Look at where we were a few weeks back, and then now look at where we are. So that's a breakout from the trendline channel on the Banknifty as well, and also Banknifty stays much above the previous breakout zones from where it made the previous all-time high. Now the Nifty has closed on the daily charts. It's flat, 18 points only up, the hammer pattern. So that shows that it has pulled back and then taken support of the CIP change in priority zone, and then it is bounced up. And an inverted head and shoulder pattern on the Nifty is still seen breaking out. Right? And the Banknifty has closed 0.73, that's 300 points above on the daily charts of Friday. It's a wide range bullish candle that's found the daily charts as well on the Banknifty, and it's closed about the 43,700. Banknifty has closed about, Nifty had closed about the 18,300 zones, and Banknifty seems to be having a breakout of the rounding pattern as well, as also seen. But interestingly, a narrowing ascending wedge could be seen on both, from the previous swing high. If you see, a narrowing ascending wedge can be seen, which has the probability of breaking down as well. So that's only concern. Otherwise, price patterns are all turned completely bullish after the previous, negating the previous weeks. And so the rally is resumed in the previous weeks. Negative candles are all taken out, and the change in variety bounce is what is in progress. And that's what happened in Nifty and the Banknifty. It's only a few points away from the all-time high. The Banknifty, as I said multiple times earlier. So Nifty also seems to be, seems to have gained the strength, and it's heading towards the 18,500. So on the bands, if you see the expansion on the upside, the bullish bias indicates further up move. Price is above the median of, much above the median of 22 EMA on the multi-bands, and Banknifty also is showing an expansion on the upside of the bullish bias, the price above the median. So bullishness is indicated by the Bollinger Bands also. So look at this Bollinger Bands, it is almost working. It was contracting last week, but this resumed the expansion on the upside, and then seems like price may be able to catch up on working on the bands. Banknifty also consolidating. At the beginning of the consolidation was there, but look at this upside change in the Bollinger Bands, which indicates further upmost could come in. And this is what the rounding pattern that I was talking about on the Banknifty, and rounding pattern can be seen on the Nifty. So it is not completed that yet on the Nifty. So there could be a reversal, or there could be a breakout. It could happen there from so that would be very, very close to the all-time high levels of the Nifty. But the Banknifty, it's inches away from the all-time high. There's 500 points. It's nothing for Banknifty. So that's the ascending wedge that I'm talking about. it's from the previous swing high to the current that 13% move. If you just draw a trend line on the daily charts, it's an ascending pattern. So there is some pullbacks, some consolidation could come in, is what that indicates. So that's it. So let's look at this is the ascending wedge on the daily charts that is wrong. Let's look at the levels on the resistances. The first resistance now could appear at near to 18,400, 18,385, 18,442, 18,475, 18,541, 18,678, 778, and 880, 1887. It's all-time highs. That's how the resistance and upside downside. You will see supports at 18,250 zones, 200 zones, 18,140. 1870, 18,000 rounding numbers, 17,975, and 17,863 likewise. It's all previous lows and highs, right? Support zones. That's what Banknifty rounding pattern is clearly visible. Breakout is already seems to be happening. So next resistance would be 83,850, and then all-time high 45,151. 44,000 is rounding number, which may have resistance there. There may be some consolidation that may happen before it breaks out from there. Support down there would be at 33,600, 33,350. So 43,000 rounding number zone, 42,800, 42,600, 42,300. Likewise, on the downside has rounding across. Making all of these levels of support and resistances on the Nifty and the Nifty, right? So moving on, we are just looking at the momentum and the trend indicators. We are using basically RSI, and the trend we are using the ADX. Left side you're seeing the weekly charts, right side we are seeing the daily charts, and that's of both indices. So you can clearly see that the momentum is rising up and it's bullish on both the time frames, and is not about that rising momentum, bullish momentum about the RSI 60. And Nifty also the same. It's rising up and then rising momentum, bullishness, not out about that. If you look at the ADX indicator that is shown here, it is also turned to be bullish, but except that there is some weakness in the Banknifty's medium time frame. Otherwise, so trend and momentum is bullish, so no doubt about that. Moving on, volatility and opportunity analysis. If you see, the VIX has spiked up 4.5% last week, despite the fact that the market has moved up. Especially it is more of more than 1,100 points, and then still the VIX is spiking up. You can understand the elections result and the inflation, US inflation data output and all that, but it's cooled off a bit on Friday, but still the VIX has been spiking despite the market move. This is a divergence, and this gives a probability of the breakout could fake resistance that may not be real in the short term. So that's what you have to be cautious about. And remember, last 3 weeks alone, the VIX has spiked up 25%. That's a sharp reversal from the less than 11 historic lows that we saw a few weeks back. So in 3 weeks, 25% spike. That's the way the mean reverting nature of the VIX spike. So we have to be cautious about the VIX. So VIX is spiking, that's a concern inspired, and that's a divergent to the fact that the market is moving up. So we have to be cautious, extremely cautious. Right? Open interest data, there is a divergence there as well. The open interest on the Nifty is long unwinding, which is bearish in nature. People are unwinding the long version that they are technical to some reason, and Banknifty is showing short covering, it's bullish. Banknifty is about to make all-time highs for sure. Is looking at the open interest data that built up, that is on the futures that is built up on Friday. Now looking at the May 18th weekly options open interest data, we can see that it's bullish on the PCR side. It's 1 plus on both 1.3, and even more bullish on the Banknifty. So put call ratio open interest options for the weekly expiries is bullish for sure, but there is a divergence in the futures build-up that has happened where Banknifty is having short covering, while Nifty is having some kind of bearishness. Look at the levels, look at the support zones that's built up on the Nifty and the Banknifty. Huge supports are there that's seen. And what are the levels indicating? The highest put trading is seen at 18,200. Highest resistance is seen at 18,300, hardly 100 points. And the second level of support is seen as 18,300. And the second level of resistance would be seen at 18,500. So the play would be between 18,000 and 18,500. So therefore more days to the weekly expiry to happen. So we'll watch. But that's what it indicates as of now. Banknifty 43,500 strangles are what Banknifty option riders have written, which means that as of now the bulls has the option riders are seeing some resistance near the 41-time high of 44,150 zones. They're thinking that it could. That's why the 43,500 strangles are written. So the put and the call writing highest is seen at the same zone, and the second level highest put and call writing is seen at 41,000 and 44,000, wide range there, second level. So put call ratio is mentioned here wrong. right? We had already seen that it's not 0.64 and 0.52 making out of this correction. It's actually 1.09 and 1.38. That's definitely bullish, right? So let's move on and see how the industrial sectors, the major 6 or 7 industrial sectors, how they perform. So in a glance, in a snapshot, if you take, you can see that the most bullish is the auto sector and the pharma sector, which is auto is breaking out of a consolidation at 4.2% of wide range bullish candle is what's from the auto sector. Even the FMCG also is broken 1.5% wide range bullish candle. And both the time frames higher in the lower, I mean the weekly and the daily, both are bullish from the momentum perspective on the medium term and the short term. So that's auto and the FMCG which is breaking out and then it's showing most of the bullishness. That is recovering it's in the sideways, but it's a flat close. So close, it's 1% close, not really flat, but it is recovery is seen in the momentum is sideways in both. So we'll have to wait for some more time before taking long versions on that. But the metal and the pharma got hit 2% down, flat close on the metal, and pharma is flat close, so my 1% down. So that's where it got hit, and then it's correct that it's not flat. 1% up is not flat. Let me just correct that. 1% down is not flat. Even the farm also is correct that, so it's not flat. So this is the story. It is recovering. Metal and the pharma is kind of bearish, getting in the bearish sideways momentum. Getting in the bearish from the candlestick perspective, the momentum is still sideways. Nothing is bearish. The momentum perspective in the short term. Auto and still breaking out. Reality also is breaking out 1.8%. So 3 sectors which are leading this rally. It's auto, FMCG, reality. Right. Last week auto 4% up. 4.2% up, FMCG 1.5% up, reality nearly 2% up. All of them having bullish momentum in weekly and daily charts. So bullish on those 3. Others are also recovering. Let's look at the charts here. See here, that is recovering, but you have gap resistance and all kinds of resistance there. So we have to keep it close. That's momentum is still sideways but rising up. Metal can be seen as got hit back, but momentum is still sideways and struggling. Auto breaking out of the consolidation zone. Momentum also has a knock in the bullish zones. Pharma is weak. It is trying to move up but face resistance and then taking a bend on the top of the red parallel channel or red trend line. FMCG is broken out from the consolidation and is heading north. Mega bullish. The reality also has broken out of the parallel channel where it is consolidating and momentum is almost got into the weekly momentum RSI about 16, which is bullish in nature. So that's how the sectors are performed. Let's move ahead and see how the most contributing heavyweight stocks into the Nifty 50 index. HDFC Bank is trying to recover after a failed breakout attempt. A flag and ball is still valid. Momentum is yet to climb into the bullish zone, so made in the sideways one. HDFC also is doing the same. Ahead of the merger, you have the momentum that's trying to come back and then climb and do the breakout attempt once again, with the momentum still staying sideways. Otherwise, it lands also sideways momentum and trying to rise up. Green close. It's been moving up continuously for several weeks now from the previous swing low that it has made. So it's trying to move up. Green close bullish, but sideways is what the momentum is all about. Infi still struggling in the bearish zones. TCS recovered and rising in with sideways momentum on the medium term. ICICI Bank is trying to make a new all-time high, inches away from that. Momentum is in bull zones. Everything perfect. Trend is also bullish. Black Bank also has climbed the bullish zones and its medium-term charts are showing that it's green close. It's rising up, but remember it has been doing the zigzag up and down motion within the range bound moves in the medium term. So you have to see whether this dog resistance or trend line up there would be taken out or not is what you have to closely watch. But otherwise, momentum is so bullish stocks are ICICI, Kodak, and trouble stocks are HDFC. Trouble stocks and sideways stocks are HDFC and Reliance. SPT Twins and Reliance are making the sideways. Infi is having trouble. Only trouble stock is Infi. Otherwise, sideways is maintained by the TCS and bullish stocks at ICICI and Kodak Bank. That's how the industry heavyweights are done while the rally is being happening. So, right. So, except the idea, all the stocks are maintaining. The bull trying to climb back to the bullish zone. See the steps here. So we can summarize. Now, here is interesting thing. The Fyers have turned net buyers of equivalent to 7,000 crores of buying for the second consecutive week. This week and previous week also around 7,000 crores of buying has happened. So that's billions of dollars of money that's coming into the stock market by the foreign investors. So they may be knowing more than what we know, and something maybe really bullish is what we'll have to assume. So that's the highlight. That's why market is moving up. Up. No, they was up for profit booking last week also 1,200 crores, very small profit if you see that, right? So that long as on the derivative side, on the both institutions have moved up derivative side. That's what I'm saying. So institutional support is coming in, market is moving up. How long they stay? That's what the concern. But otherwise, things looks good. Now looking at the global markets and the commodities and the currency, let's analyze the currency. First, dollar index has spiked up. You can see that green ends up breaking out of the cup and handle patterns, and if that resistance is taken out, we have trouble. 102.7 is what. Remember, we had a downswing of 14% from the top, and it's a 1.5% up move, and cup and handle breakout is probably what may be happening. So keep a close watch. But USD INR economically has spiked up 0.63%. It's 82.2. Once again back to the weakest levels and heading towards the all-time high down here. Remember, we talked about a wedge, and that wedge is where exactly where it took support and then bounced up, and then once again attempted to take out is what it looks like. So that's trouble for the wiki if the wiki rupee is getting even more weaker. Now crude oil has is 1.8% down, which is relief. It's 30.3 sideways momentum, fine, everything fine there. Gold is still on the top. It's not ready to come down this time. It's on the 2.3% down, but it's at a top on the resistance zone. Remember, it had made 27% up move, and that's what it is. This is crude oil, and this is breakout that may be happening. All-time high is inches away for the gold now. It's a cup and handle for the only medium term. Momentum is bullish, trend is bullish, price pattern is bullish, trying to break out. So people shifting safe havens while the market is trying to break out is a cause of concern. Why is gold gets spiked up so much when the equity market also is spiking up? Is something that you have to keep in mind. VIX also is spiking, so there are causes for concern. Crude oil is cooling off, as I said before. That's a graph that you've seen here. So otherwise, if you just summarize, dollar is spiking, rupee is weakening, crude is falling, gold is at resistance on the top, and the last one, US markets. US markets, it's some other market, and then any moves, big moves from there would definitely impact our markets and our economy and everything, right? And Dow Jones is facing resistance. You can clearly see that it's 1% down. No, it's 0.5% down on the S&P 500 down here also. But Nasdaq is giving some green attempt to break out, but it's still on the S&P and trying to break out since several weeks. Going to be sideways overall, except for the Nasdaq, which is slightly moving up in momentum also. So markets on the US indices are at resistance, which is something that we have to be worried about and cautious about. That's it. So two action numbers for the next week. Tata Motors, look at this flag and pole pattern, and it's broken out, and then it could give a decent RiskReward. Volumes are also above the moving average. Momentum is up, trend is up, and all seems to be very good. And then good RiskReward trade could be attempted on a swing trade basis on this Tata Motors long call. Now, intellect design, IT may be struggling, but it's recovering in this trial, and the sector itself has gone on the sideways. Now, the first breakout has happened from the intellect design, and then look at the volumes, mega bullish momentum. Somebody knows something about this, that's why they're buying it. Somebody with deep pockets, so we have to follow them. That's all. It's a consolidation breakout. It's huge volume, momentum breakout, and trend breakout, crossover breakout, whatever you call it. So clear bullishness, intellect design, and Tata Motors long calls. Now, this is another strategy for the next week. Payoff charts of the Nifty options is what you're seeing there. We are basically using a calendar spread, taking advantage of the VIX Vega advantage. So basically, we are selling OTM put and calls, nearly 500 points apart, and then buying the hedges of the next week, the 4 week, on both sides, and then taking advantage of the Vega. So if you look at this, the premiums are very low, and we're not getting as much range as it used to be earlier, but we are still it's reasonable as compared to any other non-directional hedge strategies. If you take this, gives the most hedge. Now the maximum profit seems to be very less. Return on investment does not look attractive, but that's all we have. So all we have to do is increase your capital size. As per your capital size, increase your position sizing as long as the VIX is below the 20, and then come out early Once you target to get 1 to 2%, come out of that, and that's how you have to play it. But you'll get this 1 or 2% every week is the beauty of this strategy, and it's completely risk defined and very beautiful range is what you get there. So that's the payoff of the double diagonal calendar spread option strategy on the Nifty that you're seeing for the next week. Having seen all of those, let's just wrap up. The market has resumed the rally now. It is 9.2% up on the Nifty and 13.5% up from the previous swing lows, and rally seems to be heading high, and it has completely negated the previous week's negative cues and a small pullback that happened in the Banknifty, and it is literally broken out from the trend lines, broken out from the previous breakout zones, and broken out from the moving averages and price patterns and all this. So momentum is, oh, it's a mistake there. Momentum got to last week. I just missed to update that. Momentum is bullish, right? Trend is bullish. Sorry about this. I just forgot to update that. So momentum is bullish, trend is bullish, operators is bullish, orange bands are bullish, expanding on the upside. FS a net bias for 2 weeks consecutively. Everything. Banknifty is 500 points, just less than 500 points away from the all-time high. Everything seems to be bullish, and the view also is mild bullish. Mild just because of the fact that it's at a breakout zone from the all-time high, very close to that. Anything can happen, right? Otherwise, it's more than mild bullish. But the view for since the price patterns are showing it's a particular position of resistance zone, it's mild bullish. So VIX is spiking. Using dice are showing red and resistance, and a narrowing ascending wedge is seen on the Nifty and the Banknifty both on the short-term charts. If you see from the previous swing to the right now, so narrowing ascending wedge normally could break down. So some pullbacks in the short term can be expected, is what it's warning about. So those are the only things that's in favor of the bears. Otherwise, it's all bullishness out there. So global cues of recession fears. Inflation has come down, but still clarity has yet to come. Interest rate hikes and COVID wars and all these things are still happening. So there is uncertainty. VIX is spiking abnormally even when the market is moving up. So that's something I do cautious about. So something is known by the big players out there which causes the fear and we don't know what is that. So keep cautious watch on that. Crude is falling. Rupee is negating the gains of the crude. That's what is happening. So it's all globally. If you look on the commodity currency and all global cues on the global indices and all, if you see these are the negative factors. Other than that, our local cues we already seen the VIX falling, VIX spiking, and the narrowing ascending wedge and all things. Otherwise, everything is bullish. So the next week's 18,000, 18,500 would be the range for the Nifty, and 43 and 44,200 is the range for the Banknifty from the dashes. Medium term, if you look at 16, previous low 16,650, 36,800 is the levels on the downside, 18,500, 44,000. If that's broken out, then it's going to be a mega rally to 90,000 for sure. Now, just to summarize, always have hedge strategies. Hedge strategies in the sense that exactly what you lose. So when you're carrying forward the overnight positions, you should be ready to take the overnight risk. Your system should be taking care of that, and you will still be in the game even if things go upside down against what your view is. Right? And also, hedging strategies can be used for getting rental income, like covered calls and cash market puts, and also can be used for investment as well as trading both. Right? So overnight, always take hedge positions. Go for calendar spreads, go for vertical spreads, and go for non-directional strategies like and condor and flags and all that. But even if your strategy goes wrong, you're still in the game. So play it safe. Right? That's what protect your capital. Risk manage your capital. That's the only thing in your hands. It could surprise you. Market clearly negated the previous candles weekly. Strong dark block long, just like that. So that's how market gives you surprises left and right. You can never be right always playing in the market. So you have to be cautious on that. The risk is the only thing it's in our control. Have stop losses properly put, have the balance hedge positions properly taken. That's the only thing that will protect you. So play it safe. So if you're watching this and if this gives you some clarity on how to play the next week, the options, derivatives, cash, whatever, if it does help you in some way, then consider hitting the like button and then subscribe. If you're not subscribed, and share to your friends and colleagues. If you're not subscribed, please subscribe right away and then help us, because we have very few subscribers and I appreciate your help in this regard. Thanks for watching. Happy trading, happy learning. If you want Telegram services, check out the description. You can click on that link. That's all. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.